The Fed made the interest rate decision exactly in line with the forecast. Nevertheless, the US Central Bank was able to surprise the markets yesterday. Today, the Swiss Central Bank caught investors off guard with its decision to reduce the key interest rate on deposits by 25 basis points. The news from Japan in the early Asian trade did not come as a bombshell, but market participants viewed this information as an unpleasant surprise. The market remembers the days when Japan's policymakers used to come up with verbal interventions almost daily. After all, the Bank of Japan has updated its policy settings to monetary tightening. However, the yen enjoyed support from those tiny changes for just a few sessions. As a result, today the yen again weakened to the dangerous level of 151 against the US dollar. Japan's Finance Minister Shunichi Suzuki repeated the familiar mantra that currencies should move steadily and that the government is closely monitoring market movements. Perhaps the US dollar would have been even more aggressive against the yen, even not for yesterday's statement by the Fed chairman. As expected, the American regulator kept key policy settings unchanged, so the funds rate remained at a 23-year high of 5.5%. At the same time, policymakers have made it clear that they are still planning these 3 rate cuts before the year end. In this regard, more hawkish market forecasts did not coincide with the reality. Although the slow progress of inflation deceleration in the United States is a widely argument to reduce the number of rate cuts to 2, the American regulator still preferred the more dovish option. Jerome Powell noted that the cut in the key interest rate would become appropriate at some point this year. Interestingly, without saying any specific timeline for the first rate cut, the Fed chairman used the very eloquent wording "in a quite a short time." Most forecasts suggest that the first easing of monetary policy by the Federal Reserve will not occur until June. Some experts consider July or even September as a possible next date. Importantly, the presidential election in the United States are scheduled for November 5th. Therefore, the July and especially the September Fed meeting are too close to this date. Jerome Powell would most likely prefer to avoid high volatility in the markets at this time. After all, even after this dovish statement yesterday, Wall Street closed at new record levels. In addition, stock markets took into account the sharp upward revision of the US GDP forecasts. Therefore, the S&P 500 index rose yesterday to the historical mark of 5,200 points, and today it's keeping on with its rise within the intraday corridor between 5,172 and 5,226, and the US dollar index continued yesterday's decline, trading in the intraday corridor between 103.20 and 103.70, and the greenback was actively sold in all major currency pairs, and most strongly in the commodity assets. But the greenback's bearish trend turned out to be not as stable as it seemed yesterday. On the contrary, the US dollar has been able to regain its footing on the back of the soft Swiss franc, as well as the sharp change in the stance of the Bank of England. The fact is that the meeting of the British regulator, which ended a few hours ago, suddenly turned out to be dovish. It's all about the number of votes cast for increasing the refinancing rate. Nobody in the Monetary Policy Committee voted for a rate hike. A month and a half ago, 2 members of the committee advocated for this decision, and such drastic changes completely bury hopes of reducing differences in the monetary policy between the United States and European countries. These updated prospects caused the country market to return to yesterday's positions and revived the US dollar after yesterday's collapse. As for the euro-dollar pair, optimistic reports on business activity in Europe published today supported the single currency. Thus, Germany's composite PMI rose to 47.4 in March. At the same time, the decline in the manufacturing sector became milder. The main catalyst for the composite PMI's growth was the service sector. The preliminary index of business activity in the Eurozone stands at 49.9 in March, and this reading was the highest in 9 months. At the same time, inflation of output prices, on the contrary, went down for the first time in 5 months. The comparison, the US composite PMI, also published today, fell to 52.2. However, it still indicates moderate improvement as it's in the growth zone above the 50 mark. As a result, the euro-dollar pair, after yesterday's rise due to the weakness of the US dollar, rose in value by about 100 pips. However, today the greenback is again holding the upper hand, and the euro found itself in an overbought situation. In addition, the single currency was priced by the pound sterling, which followed the meeting of the Bank of England, began to rapidly lose ground. Therefore, the euro-dollar pair has already formed several pullbacks in the current corridor of 1.0892 and 1.0946 today. But still, the euro has managed to stay slightly above yesterday's low at 1.0840, which acts as a support today. The nearest technical resistance level for the euro-dollar pair is 1.0998. Meanwhile, oil prices also reversed downward today, although this trajectory of oil prices looks quite logical amid the US dollar's advance. Oil usually rises following the news of a decline in the US oil inventories. The American Petroleum Institute reported yesterday a decrease in reserves of both oil and fuel. Today's sharp drop in the Brent price apparently indicates that oil is simply overbought. Moreover, a downward retracement should have occurred long ago. It's difficult to predict the time for its completion. The intraday corridor for the Brent crude is seen between $84 and $85 per barrel. Amid a change in market sentiment, the ongoing downward retracement may well turn into a full-size correction. This means a further slide over oil prices. You have watched the market review by InstaForex analyst for Thursday, March 21. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. See you online tomorrow.